This episode of the Old Dogs REI Network is brought to you by Mino Studio. Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manassero.
Hello, old dogs, and welcome to
Fun Facts Friday.
This is our once-a-week, only on Friday show, where we have special episodes not featuring guests, where I will share tricks, tips, terminology, and techniques that will help skyrocket you to real estate investing success. Today's topic is Primer on Investing in Foreclosures. But before we get started, I just want to touch base with you guys, as I always do on Fun Fact Fridays, and just see how you're doing. I have been listening and reading my emails and trying to pick up a vibe in terms of what people are doing. It seems like a fair amount of people are sort of waiting and watching, and then there's others that are just plowing forward. But it seems like there is a sort of an air of caution, and that's not a bad place to be. So I just want to tell you during this time, it's a good time to prepare and to actually spend some time looking at potential investment strategies and opportunities. And you can be practice your analyzing of properties. You could be doing market research to see what markets seem to be presenting some of the best opportunities, and there's a lot of things you can do. So I would recommend, if you are in that sort of wait and hold area, that you also focus on your current properties to stabilize and even do some improvements and other things if you're not investing actively outside of those properties. Well, let's jump into our tip of the week. I'm going to borrow from my dear friend Michael Lantrip's book on the language of the deal, real estate investing vocabulary of terms, meanings, and explanations. And today's little term we're going to do here is Holdover Clause. Now, this is the section of a real property lease which describes what will happen when the term of the lease expires, and it covers the possibility that the tenant remains in the property. Holdover may be strictly prohibited, and the clause will provide that the landlord may evict the tenant, or that the landlord may move the tenant's possessions out of the property and change the locks, provided this does not violate state or federal law. Most leases will provide for the tenant to continue to occupy the premises under certain circumstances and conditioned on certain payments. The tenant will be in a month-to-month tenancy, and each advance payment will only ensure the following month's occupancy. The holdover clause will describe the terms that will prevail if the landlord does permit the tenant to continue occupancy month to month, but the tenant will rarely have any rights at all compared to the rights enjoyed under a 12-month lease. So that's our little tip for today on holdover clauses. Let's move to our topic, Primer on Investing in Foreclosures. Now, I've been talking a lot about predictions of a crash or recession in the fourth quarter of 2021. I'm not saying that I particularly believe this. I'm just relaying information that is coming to me. Some say there may be something sooner. Some say it may not be until well into 2021. I, at this point, am just watching and observing and trying to collect data as I go along. But while, as I'd mentioned at the beginning of the show here, that one of the things that you can do at this time is to sort of prepare yourself for opportunities ahead, and that includes foreclosures. If this happens, the number of foreclosures will grow significantly. And for those who are prepared, there may be great investment opportunities. As I've featured on the show, I don't know how many folks that were in 2007, 2008 that really got into a great position to buy foreclosure property at just a tremendous discount. Some of these guys are, that just launched them into a successful investing career. So I'm just going to provide you some basic information that you can use, and hopefully you'll dig deeper if this is an area that interests you. Investing in foreclosed homes is one of the real estate investing niches that has tremendous potential, sometimes more profitable than any other forms of real estate investing. How else can you buy a home faster than the traditional means for a discounted rate and build equity at a tremendous speed in just a relatively short period of time? Now, it is a great way to invest, especially if you're going to see the upside of that. If you buy low enough and you see that grow, it's going to be significant. But there are potential risks. So the first thing I want to present is, what are some of these risks? Now, to be a successful investor in foreclosed property, real estate investors have to know, number one, how to find and acquire a foreclosed property. Number two, how to finance a foreclosed property. Number three, how to ensure there are not unknown liens or other back taxes. Number four, how to renovate them without going over budget. And number five, an exit strategy where the investor leaves with a profit. Okay, and there are more, but those are some of the key things you need to know. These are all items I will discuss as I go on here. First, let's take a look at what is foreclosure investing. Foreclosed homes are properties whose owners have been unable to maintain mortgage payments. The mortgage contract specifies what bank has a lien on the property. When a home goes into foreclosure, that bank takes ownership of the home and then puts it up for sale. Foreclosure investing is when a company or individual buys these foreclosed homes for renovation and resale. Most foreclosed homes are sold at auctions, just as you may know, but you can also go to banks directly and you can establish relationships and be able to get involved in other ways, depending on the bank. If it's a local community bank, you might have a better chance of that happening. Generally with larger banks, they have a policy that it all goes through auctions. So let's take a look at those advantages and disadvantages of foreclosure investing. Buying a house in foreclosure is not a transaction to take lightly. There can be unique rewards from buying a foreclosed property, but there are also many risks. So how do foreclosed homes work to your benefit, and what should you look out for? So first, let's look at the advantages. Once a bank foreclosed on a property, lenders are highly motivated and looking to recoup any money that they can from that property. That means they sell foreclosed properties as soon as possible, allowing a much quicker close than a traditional property. In most cases, foreclosed homes are sold far below market value, sometimes 20% to 50% lower than other properties in the same neighborhood. That's an advantage rarely seen in other forms of real estate investing. Another advantage is that when buying a foreclosure, the bank typically satisfies all liens and the new owner usually gets a clean title from the bank. That means they're not responsible for any back taxes or debts that the owner might have had. But keep in mind, this is something to verify because each property can be different. Also, because homes can be bought far cheaper, investors can build equity in foreclosed homes more quickly than other homeowners in the neighborhood, making it possible to charge more for rent or sell the property at a higher price. Well, that's just some of the key advantages. Let's look at the disadvantages. Because foreclosed homes are sold as is, their condition isn't guaranteed. They may need significant repairs and improvements to not only be a sound structure, but also to be appealing to renters or new owners. It's safe to assume the previous homeowner of the foreclosed home couldn't afford to fix issues if they couldn't even keep up with the mortgage payments. Because of this, a foreclosed property may need access to a lot of capital, whether it's through a bank or private money lenders, whatever it may be, to get that home back into good condition to make a profit. Well, let's look into how do you find foreclosure properties to invest in. The first part of learning how to buy a foreclosure and most forms of real estate investing is just finding a property, right? In some ways, it's not too difficult from looking for traditional home sales with some additional steps. So where would you find these homes? There are several ways to find foreclosed homes. Since foreclosure is highly regulated, foreclosed homes must be documented in public. You can find records of foreclosing homes at your local county recorder's office. Notices of sale for foreclosed homes must be published in local newspapers and their websites. You can also search websites for banks and government agencies. Auction houses that hold foreclosure sales can also tell you when the next one's happening. Or you can utilize relationships with local real estate agents that specialize in foreclosures. Online realty sites like Zillow or Redfin also identify homes in the foreclosure process, so sometimes they call them pre-foreclosures, in area searches. But keep in mind that some foreclosures may be so new that they haven't made it to online sites yet. So, and a pre-foreclosure means somebody may be behind a month or two on their mortgage payment, so they may catch up, and some people end up getting those addresses, knocking on doors, and it can be a kind of a brutal way to find foreclosures, but some people do it. Let's look at financing foreclosed homes. There are many ways to finance the buying of a foreclosed home, and it comes down to your experience, network, and overall business strategy. Some lenders offer renovation loans that cover the purchase price and expected repair cost of foreclosed homes. You may even be able to obtain a conventional loan for a foreclosed home if it is in good and sound condition. Another option is it would be like loans outside the traditional banking system. Maybe a hard money or a private money loan. Sometimes you might have to obtain that type of loan because it's not necessarily something that fits the criteria of a bank. But once you get it fixed up, then you can refi and pay off that usually higher interest loan for a conventional loan. What are some of the other additional investing tips that you might need? Key thing is sort of roll up your sleeves here. You'll likely have to make major improvements on a foreclosed home to make it sale worthy. I'd also say roll up your sleeves too and look for those properties. You have to dig and find those deals because they're very competitive and a lot of people are looking for them. Be ready to work hard and have ample cash reserves for repairs and upgrades. Also, make sure, we talked about liens a little bit there. While most foreclosed properties relieve the buyer of any existing debts tied to the homes, don't take that for granted. Double check to make sure your title will be lien free or any other kinds of liens or holds before you buy that property, or else you could face a significant amount of debt just to keep the property. Get the property inspected. That's really key. Never buy a foreclosed home until you've had it inspected by a professional. They'll be able to find issues with the property that aren't visible to the untrained eye. And by spotting something, they can save you money down the road. Really key too, know your state foreclosure laws. Every state has different regulations on how to buy a foreclosure. So to avoid complications, learn what your state's laws are. Your state's Attorney General's website is a great place to get started with that. So overall, just in summary here, buying a house in foreclosure can be an extremely profitable, dependable income generator for real estate investors. But it's not without its share of risks. Before investing, ensure that you have the right training, and even after that, make learning about foreclosure investing and other types of real estate investing a lifetime habit. It's something you want to learn and you want to know well before you go into it, because there are folks that have been doing this for many years that can help you if you want a coach to do it, or there's also great resources out there, tons of them, that you can access to learn more about foreclosure investing, where to find these homes, and how to negotiate the best prices. Well, that is it for today. Please note, Old Dog listeners, everything presented here today can be accessed in our show notes on the Old Dogs website at olddogsreinetwork.com/blog. And you're going to look for the episode entitled Primer on Investing in Foreclosures. So until next time, remember, cash flow is king and real estate investing the means. Until next time, keep moving forward, and may God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.